Hi guys, welcome to this Moneycontrol live stream. I'm Nandita Khemka. Was going to come to you from Moneycontrol Studios, but given the fact that we are seeing some incessant rains in the city of Mumbai, I'm forced to anchor from home today as well. Like extremely rainy morning here in Mumbai, and in fact the IMD has upgraded the alert. It was an orange alert earlier, but now it has been upgraded to red alert. But of course, that's only till about 11:30 a.m. or so. But nevertheless, hope you guys are safe out there and wishing everyone a safe travel to work or wherever you are traveling. But of course, in terms of market, it has been raining gains on the Wall Street as well. We saw the Nifty clocking in a second straight week of gains last week. In fact, we are, at a two-month high on the benchmark indices. In fact, markets also posted their biggest weekly gains in 3 months and of course longest gaining streak in a year or so for the market. But if you look at some of the key indices like Sensex, Nifty, Nifty Bank, etc., all of these indices clocked in gains of somewhere around 1% or so last week. But this week, the trigger would be the Fed meeting that takes place on Wednesday night, and Thursday morning is when we'll get the rate decision, or in fact, we'll be reacting to that rate decision. But yes, a 25 basis points is being expected by the market. And if that happens, we'll see whether we see an up move here, where the bulls can retest the 25,500 mark, or we remain sideways, or and that 25 basis point rate cut is already priced in. That's something we'll of course watch out for. In terms of technicals as well, we have an expert on the show. We'll ask him what are the key levels to watch. Because 25,154, that's the recent swing high for the month of August. Uh, you know, so that level will, of course, will be grabbing headlines as well. But yes, lots to watch out for. Lots of stocks in focus. Defense stocks were up and about on Friday. Today, we'll have to see whether we see these stocks extending their run or not. We have some pharma names that will be in focus, and of course, your stock-related queries. All of them will be taken up. So don't forget to send them in on a live feed. We'll try and get them addressed as well. But before we move any further, quickly take a look at the top stories at this hour. Well, stocks on Wall Street ended a Friday session on a mixed note. The Dow shed more than 270 points, but the Nasdaq gained almost 100 points and hit a fresh record high. That's, of course, ahead of the US Fed meeting this week. We saw the Nasdaq clocking a fresh record high in Friday's session. All eyes, of course, will be on Fed decision this week. Asian markets are mixed, following Wall Street cues, but the Nikkei is shut on account of a holiday today. Kospi was trading in the red. The GIFT Nifty, however, is indicating a lower start for our markets. Looks like the bulls are getting a little fatigued after an eighth straight day of up move on Friday. Let's see whether we can defy these cues or whether we'll see some bit of tiredness when it comes to the bulls. Well, crude oil prices gain as investors assess the impact of Ukrainian drone attacks on Russian refineries. Gold prices stay near all-time highs. In fact, as investors eye a Fed rate cut this time. Retail inflation accelerates marginally in August, rises to over 2%. In fact, climbs the over 2% mark after hitting an 8-year low in the month of July, but comes below the expectations of CNBC TV 18. Food prices continue to contract. Economists say doors open for RBI to cut rates by up to 50 basis points. SEBI chief says will circulate a consultation paper on longer tenure for derivatives. Market regulator also relaxes 25% public float rules for large IPOs and also allows life insurers and pension funds to participate in anchor book ahead of IPOs. Well, those were all the top stories this morning, but quickly bringing you a recap of what really transpired last week and on Friday in particular. As I mentioned at the start of the of the show, that the Nifty Sensex, both of them clocked in a second straight week of gains. Sectorally, all of them, saw gains with IT and PSU stocks gaining the most last week. Of course, we saw IT stocks all fired up because of that record or highest ever buyback announced by Infosys had a rub-off impact on other IT names as well. In fact, experts are also expecting TCS to announce a buyback as well. So yes, IT stocks in favor. PSU stocks, of course, had a great run last week. Defense names were particularly up and about. in Friday's session, and in fact, even PSU banks have been doing fairly well of late. BEL, Bajaj Finance, Shriram Finance, Infosys, Adani Enterprises, these are some of the top gainers last week. Whereas Trent, Titan, Eternal, these are some of the laggards. These stocks have already seen quite a bit of a run up. So some bit of profit taking happening in FMCG and discretionary names. In terms of Friday's action, of course, we rose to a 2-month high. Nifty regained that 25,100 mark. Just want to point out that we've been making higher highs and higher lows. So yes, still 24,400, 500 kind of levels, something that of course will be watched out for. I beg your pardon, 25,400, 25,500. So those are the levels to watch out for. In terms of FNOQs, the Nifty put call ratio jumped to 1.29 vis-a-vis 1.17 in the previous session. And talk about stocks in the FNO band. HFCL is the new entrant, and two stocks remain in FNO band, the likes of Oracle Finance and RBL Bank. Well, that was all about how things really panned out last week and Friday. But let's bring on board our expert for today. Joining me is Rajesh Palviya of Axis Securities. Rajesh, lovely chatting with you. Quite a rainy morning out here in Mumbai. Uh, and of course, it's
Good
been
morning.
raining games on the last street as well of late. But he's so 25, 400, 500. Do you think those levels can be retested today, especially given the fact that we have the Fed policy meet later this week?
Good morning, Nandita. So again, if we analyze the overall structure for Nifty, Nifty managed to give breakout of falling trend line on daily chart. Again, Nifty is sustaining about to all its near-term, short-term moving averages. Looking at the data setup, Nifty is comfortably holding about to 25,000 level, and put-based concentration is also moved up higher to 25,000 level. On the call writers front, most of the call writers have covered their position in the previous week as Nifty is now comfortably holding about 25,000 level. So they have shifted their writing position to 25,300, 25,500. There is a possibility that if Nifty sustain about 25,050 level, 25,100 level in next couple of days, I think yes, there is a possibility of another leg of rally towards 25,250 to 25,350 in the continuation of this up move. Again, in this rally, Bank Nifty also started participating in this up move, and Bank Nifty also managed to cross 20-day moving average. Bank Nifty managed to cross its major call concentration area of 54,500. So here also we have witnessed some short covering action in the previous week. Looking at the data for Bank Nifty also, we believe that if Bank Nifty sustain above 54,800, 850 zone, here also we may witness some short covering action, and then possible rally may extend to 55,000, 55,200 in the continuation of this up move. So both indices are looking bullish. One should remain on the long side of trade. For Nifty, one can trail their stop loss at 25,000 to hold the position. For Bank Nifty, one can trail the stop loss at 54,500 to hold the position. Even on the sectorial front, a lot of sector have attracted on the buying side, and I think broader market may also witness a good amount of rally in the coming week. So in this week, so I think one should remain on the long side of trade till we are holding about 25,000 level.
Okay, those are the levels. And the good thing is that the Nifty Bank Index also started participating. So 54,800, 55,000, those are the levels to watch out for. But consumption of late has been witnessing some bit of profit taking. We saw the likes of Trend, Titan, emerging as the top laggards for last week. Do you think it's time to take some profits when it comes to consumption, or would you use these dips to buy more? And any names that stand out really?
So from consumption basket, yes, there was some profit taking, but still, if we analyze on the near-term, short-term structure, most of the stocks are holding the strength, and we believe that maybe some mild profit taking and then consolidation, and then finally we can see again run up in this consumption basket as there is a clear buying interest in most of the consumption space as. GST 2.0 will definitely going to have a demand, demand boost, and we may see good numbers going forward. So I think to play this GST 2.0, and disposable income is also increased, as tax bracket is also moved up higher. So I think one should remain invested in consumption basket, and going forward again in this decline, one can use this decline as a buying opportunity, and possibly we may see again these stocks may continue further. Moving to the stocks front, I think FMCG is looking promising, as the stock like Britannia, DMart, all these stocks are showing sign of strength. And I think the way charts are shaped up, we believe that the Britannia can extend its gain. Possible target towards 6,400 to 6,500 we may see in the near term perspective. Buy and accumulate would be the strategy, with stop loss of 6080. Again, from the same basket, one can focus on paint related stock, Pidilite, Asian Paint. Both stocks are in our list, but Pidilite is looking more promising. We believe that this Pidilite is having strength to continue further upside. 3250, 3300 could be the next target. Buy and accumulate would be the strategy. One can keep stop loss towards 3010. So I think these two stocks are looking attractive from FMCG basket. Again, automobile is also looking promising. So I think whole host of automobile stocks are also looking promising. And again, GST cut would give, again, demand boost in this sector also. So be it two-wheeler, four-wheeler, I think one can remain invested in automobile space also. Here also we could see good traction. So buy and accumulate would be the strategy. Any minor decline should be used as a buying opportunity in consumption basket.
Okay, buy on decline, that's the call on consumption. And so many names Rajesh has already shared. But Rajesh, if you want to look at the pre-open, we're looking extremely flat at the juncture, at the current juncture, 5 points higher on the Nifty in the pre-open, mid-cap index, 0.2% kind of a gain showing up. Of course, let's see how things really open up, at 9:15. But talk about some of the other pockets and what are your picks there? If you look at, perhaps the short to medium term, any other recommendations? Perhaps
I
for the
think
day or for the rest of the week?
Yeah, sure. So I think one can look at defense basket. Here also we are bullish, and the way most of the defense stocks have moved up in last couple of days, and fresh breakout is clearly visible on most of the defense stock. So Hindustan Aeronautical is looking more promising from the defense space, and we believe that the kind of breakout which we are observing on the weekly chart, falling channel breakout is there on HL. So HL, we are projecting target of 4850, 4900. One can buy Hindustan Aeronautical with stop loss of 4650. Metal basket is also showing sign of strength. So Hindalco can be looked at. Fresh breakout on daily as well as on the weekly chart. So Hindalco also looking promising. One can buy this stock for upside target of 785 to 790. On the downside, the one can keep a stop loss of 745. Again, on the another basket, like EMS theme, Dixon is looking
Hmm.
bullish. The way stock managed to give breakout of previous swing high of multiple supply zone, we believe that Dixon may extend its gain. Possible target towards 18,400 to 18,500. So one can buy with stop loss of 1790, 17,900.
Okay, those are the stocks. Of course, Dixon also looking damn good on the charts. But let's talk about DCX also. It has signed a non-binding MOU with the Tamil Nadu government and it will be setting up a manufacturing facility at Hosur, Tamil Nadu. The stock has been doing well. Last 1 month we've seen the stock gaining traction, a double-digit kind of up move, 14% or thereabouts. It's at 280 or so at the current juncture. Still has quite a lot of distance to cover when it comes to its 52-week highs, which is placed at 393 or so. But in the very near term, 300, 310, these are the kind of levels that one should be watching out for on a DCX. Would you look at these levels, or do you think it has the legs to go even further up?
So we have witnessed, significant corrective move in DCS, and stock was in lower top, lower bottom formation. But since last couple of week, stock has shown a sign of recovery from the lower level. On the lower side, stock has formed a base at around 250 level on the daily chart. If we analyze the near-term structure, stock is now trading about to 20-day, 50-day moving average, and stock managed to give breakout of contracting triangle, symmetrical triangle formation breakout on the daily chart. So if stocks continues to trade about 270, 268 zone, then yes, there could be a possibility of some buying action to be there in this counter. 285 would be the next first target. If it crosses 285, then yes, possibly we may see extension of rally toward 295 to 300.
Mm. Okay, that's the view then. I think we are getting the first takes. We've opened up with the positive bias. Rajesh, hold that thought. We'll talk about more stocks, but looking at the markets, an okay start, given the fact that the GIFT Nifty was hinting at negative start this morning. We've managed to start, in the green, a 20-point uptick on the index, 25,125. That's we are at. 25,154, will be very closely watched out for. It's the recent swing high that we made in August. So that level, keep that on your radar. The mid cap index also, moving in tandem, although it's slightly outperforming the benchmarks right now. Uh, Advanced decline ratio also in favor of gainers at the juncture, almost 3:1. That's the NSE advanced decline ratio. Too early to really call it a trend. We'll wait for things to settle down to really see which way the breadth of the market swings. But right now, it's 1270 gainers to 500 declines. So, yes, looking pretty okay. In terms of sectors, then let's see how things are really panning out because, of course, on Friday, we saw defense names doing very well. The Nifty India Defense Index, was at multi-week highs. A lot of these stocks were high flyers in trade, and which is why we saw good traction in the Nifty Defense Pack. In fact, the PSU stocks were also pretty fired up, and so was IT last week. IT is witnessing some bit of profit taking, 0.4% kind of a downtick on the IT index. Metals up 0.5%, shining bright. PSU bank index is up 0.3%. The realty pack is up 0.5%. uh, Oil and gas pack is also trading in the positive. So as of now, it's the IT and pharma pack that are packs that are under pressure. Aside of that, all the other sectors are trading in the green. And in terms of individual movers, want to see which are the stocks that are taking the lead at the current juncture. It's Eternal that was down somewhere around 2% or so last week. I think it's up somewhere around 1% today. Up, in fact, it's a top Nifty gainer, followed by Hero Motocorp, BEL continuing its buying momentum, Bajaj Auto doing well, stocks like SBI, ICICI Bank, Kotak Bank from the banking lot doing well. You also have some metal names like JSW Steel among gainers. Hindustan Unilever, that's also doing well. Coal India, Hindalco, even HDFC Bank for that matter is in the green. A lot of gainers today. In fact, the list of gainers is far higher or longer than that of losers. Reliance Industries also extending its gains from Friday. Was not doing well. Infosys, that's the top laggard. Some bit of profit taking there, 1.5% down on Infosys. Dr. Reddy's, there is some news flow. Its Hyderabad unit has got some five observations from the US FDA along with the Form 483. So that stock is under pressure, down 1.5%. Sun Pharma also under pressure. You have Cipla. So, pharma stocks are witnessing selling pressure. HDFC Life, Shriram Finance, all of these stocks are in the red, and so is Nestle. That's kind of bucking the trend because other stocks are doing fairly okay in trade. So all in all, it's a quiet start. The Nifty has just about managed to slip in the red as we speak, but no big moves. And of course, there will be some bit of tiredness or fatigue, given the fact that we have seen an eight straight day of up move on the indices or on the Lal Street already. But Dr. Reddy's, that's one stock I'm going to talk about. Rajesh, it has got the US FDA Form 483 with five observations at its Bachupalli Biologics facility. Uh, this stock is down 1.5%. It has dragged the entire pharma pack lower with itself. Pharma itself has, been under pressure of late. Any thoughts here, especially for the likes of Sun, Dr. Reddy's, and Cipla?
So we have witnessed some buying interest in the last week, but yes, on the higher side, some profit taking is happening in most of the pharma stocks in today's session. So I think, but if we analyze the near-term structure is still on the bullish side. Maybe some profit taking may put some price pressure in this counter. But looking at the overall scenario for market as well as for the pharma space, we believe that again, we may see a resumption of uptrend in most of the pharma space, though there is a pressure in Dr. Reddy based on the news flow. But if you analyze the structure, stock is holding about to its upsloping trendline support area, which is placed at 1260. So that level needs to watch closely. If at all stock able to defend this 1260, I think again we may see buying interest to emerge. Even in the lupin also, we have witnessed a falling channel breakout on the weekly chart in the last week. So I think again in this stock also, if you get opportunity to buy around 2000 to 1990 kind of zone, it's again opportunity to buy this counter as the breakout is intact on the weekly chart. So keep stop loss towards 1970. So again, yes, there is some profit taking is happening. Wait for another 1%, 2% kind of correction, and then one can buy pharma space as overall near-term, short-term structure is still on the bullish side.
Okay, that's the view. The near-term structure overall is looking bullish. But let's talk about Alembic as well. There's positive news flow around this counter, although the counter has been very sideways, Rajesh. It has received US FDA EIR, Establishment Inspection Report. That's a positive. It indicates the closure of inspection of a unit for two of its Gujarat unit, API units in Gujarat. The stock, as I mentioned, has been fairly sideways. If you look at the last 1 month, 5 days, hasn't really been able to establish any kind of a trend as such. Although it is up somewhere around 4% from its August lows, so to say. Uh, Today's move up 2%. Do you think the indicates any kind of change in structure? Do you think it has a possibility of establishing some kind of an uptrend from here?
So still stock is taking the resistance from its falling trend line on the weekly chart. Looking at the near term, short term structure, 980, 990 is the key hurdle for the stock. If at all stock manages to cross above 990, then there would be a breakout, and then possible rally can extend to 1060, kind of zone. At this juncture, looking at the near-term, short-term structure, those who are already in long side of trade can hold the position. Fresh buyer can also buy it, but keep stop loss of 925 if you are buying at current market price. 925 is a multiple support area for the stock on the weekly chart. So if at all stock manages to defend 925 level in this volatile market, I think then gradually we may see some traction in this counter, and then a possible rally towards 1060, we may see in the short term of short in the on a short term basis.
Hmm. Okay, that's the view on Alembic. 925 would be a crucial level to watch out for. If that gets defended, then of course it could hold on to its gains. But let's talk about some of these railway stocks. They're extending their gains. In fact, the Nifty 500 list, I was just going through it. All of these names like Railtel, of course, that has bagged an order, but RVNL, Rides, all of these stocks are upbeat. Uh, are they worth a look now after the correction that they have already seen? Do you think the bottom is already in place for some of these names?
So definitely. So I was just checking the chart of Titagar Wagon and the way stock managed to give breakout on the weekly chart and strong buying action in the previous week. Long built up is there in the derivative data. So I believe that Titagar Wagon can extend its gain possible target towards 985, 990. We may see in this counter. So one can look to buy this stock on the downside. 925 needs to keep as a stop loss. Again, other stocks from the railway, RVNL is also showing sign of recovery and very strong buying action we have witnessed in this opening itself. So looking at the overall structure, we believe that RVNL may also extend its gain. Possible target towards 365, 380, 365 to 370 we may see. On the downside, one can keep a stop loss of 335. So I think Titagarh, RVNL, Ircon, all these stocks are showing sign of buying interest. So I think this new sector like defense, railway, again coming back on the buying side of trade. So one can focus on this stock as we have already witnessed long corrective move as well as time correction in this counter. So I think we may see good amount of rally to unfold in railway as well as in the defense space.
Hmm. Okay, that's about the railways and defense space. But Rajesh, we have a lot of queries on some of these names. Let's take them one by one because you already spoke about HAL and of course some other defense names as well. But since we have pointed queries, let's get them addressed as well. There's a query from Naveen on GRSC, Garden Reach. There's a query from Nana Prakasam on Bharat Dynamics. And I think from the defense pack, these are the two. Your thoughts on these two counters? These gentlemen haven't really mentioned if they have any holdings, but how should one navigate? Time to buy, and if already holding, keep holding on. And also, one query on Cochin Shipyard from Nitin Shahji. He wants your 6 month view. So these three stocks: BDL, GRSC, and Cochin Shipyard.
So I think if we analyze the most of the defense stocks, the structure is almost on a similar line, and we have seen most of the stocks are now trying to recover from their corrective zone. Be it GRSC, BDL, Cochin Shipyard, most of the structures are same. Now, first we'll take Cochin Shipyard here. If we analyze on the near-term structure, stock is now trading about all its near-term, short-term moving averages. Looking at the breakout on the daily chart, we believe that till stock is holding about 1760, possibility of 1900 kind of target in the continuation of this up move. BDL is again showing sign of strength. Stock took support from its 100-day moving average. Base building activities likely to be over. Looking at the near-term structure, there is a breakout of falling trend line. We believe that till stock is trading above 1540, possible upside towards 1650 to 1700 we could witness in this counter also. GRAC is now negotiating with its a 50-day moving average. Any breakout about 2600 can take this stock further higher to 2750, 2800. So I think one can remain on the long side of trade with stop losses. For GRAC, stop loss would be around 2490.
All right, those were a bunch of defense and shipbuilding stocks that were addressed. The queries were addressed by Rajesh. Hope this answers your queries. Talk about the TVS Motors as well. Of course, as you mentioned, that auto stocks have, seen a good run. And in fact, of course, it could just be getting started, so to say. But would you prefer a TVS vis-a-vis the other two, Hero and Bajaj?
I think yes, most of the auto stocks we are holding our bullish view. The way this sector is showing, continuity of uptrend. Yes, TVS Motor has also, looking attractive and possible target towards 3580, 3600. We may see in the near term perspective on the downside 3470 needs to keep as a trading stop loss. Again, from automobile space, as I mentioned in my earlier remark, like Hero Motor, Bajaj Auto, Ashok Leland, as well as from four-wheeler space, Tata Motor is also showing sign of good buying interest. So Tata Motor also can be looked at from that space, and this stock has also looking bullish and possible target towards 945, 950, 745, 750 we may see in this counter. So one can buy this stock also with stop loss of 710.
Hmm. Okay, that's the view. TVS Motors. I hope that answers your query. Let's talk about some of these capital market names as well, right? Exchange stocks, BSE, even Angel One for that matter. Of course, there's been a lot of talk about how weekly expiries may go. We saw, BSE, Angel One, all of these stocks reacting to it as well. But now the SEBI chairperson has said that they will be coming out with a consultation paper on the same. Today, BSE is witnessing good buying interest. Even Friday session saw some bit of green tick. But there's a query coming in from Debu K. He wants to know whether it's a good time to invest in these stocks. What are the charts saying, and should one buy them at current levels?
See, if your horizon is little, longer period, like, if you are looking for 6 month plus kind of time frame, yes, these stocks are looking attractive after this correction. One can use this decline as a buying opportunity. We are holding bullish view at this juncture for BSC. The way stock after this correction, stock is trying to recover from its oversold trajectory. 2180, 2170 is the key level to watch for. If stocks able to defend this level, I think some pullback action cannot be ruled out. 2350, 2400 would be the target for BSC from here onward. So keep a stop loss of 2170 to buy BSC. Again, another stock from this space is MCX is also managed to give breakout on the daily chart. Stock is now trying to hold its 20-day moving average. So here also 7700 needs to keep as a stop loss. If stocks continues to trade above 7700, a possible pullback towards 8000 we may see in this counter also. So I think from equity market related space, I think BSC, CDSL, MCX, all these stocks are now looking attractive as we have already seen a good amount of correction, and from lower level some buying action is already done. uh, Almost most of the stocks are trading near to their immediate supply zone. I think another 1% 2% kind of up move can give breakout on the near term chart, and we can see good amount of rally maybe unfold in this counter going forward.
Hmm. Okay, they've already seen a fair bit of correction, and that is the call really on some of these capital market related stocks. Hope that answers your query. Just heard a query from Satya CK on our feed, and he has a query on some of these, liquor stocks, so to say, United Spirits, Soam Distilleries, etc. He wants to know whether one should average at current market price or hold on to them, and he wants to know if there is the possibility of any upside of 15% or thereabouts in the next 3 months or so. I was just going through the 6 month chart of a United Spirits. I think since June, I think last 3 months the stock has corrected 20%. Would you advise averaging? And between the two, any of them has the potential of giving an upside of somewhere around 15% or so?
So United Spirits is now consolidating. Though overall, if I analyze on the longer term time frame, stock is still on the bullish trajectory. But yes, on the near term, short term structure, some correction is already taken place. Stock is consolidating on near to its important support area. 1260, 1270 is the key support area for this corrective move. If stocks able to defend this 1260, 1270 zone, yes, there could be a possibility that some pullback action we may witness in this counter. And on the higher side, once stock manages to cross about to a 1360, we may see a short covering to unfold in this counter, and then possible up move towards 1450, 1500 we may see on a short term perspective. So United Spirit is looking promising. Correction is already taken place. Risk to reward is in favor. 1260 needs to keep as a stop loss for upside target of 1400 to 1450 on a short term perspective.
Hmm. Okay, that's about the liquor names. Hope that answers your query. I was just going through a query on PG Electroplast coming in from Shweta, and she has some shares of PG Electroplast at 760 rupees. She wants to know whether she should hold on or book losses or buy any other EMS stocks. Of course, she's making a fair bit of a loss here, 570 or so. That's where the stock is at currently. What would you advise here?
So after strong supply pressure, now stock is trying to recover from the lower trajectory. Stock is in consolidation. Stock is comfortably holding about to 20-day moving average since last 5 6 trading session. Though we have already witnessed a corrective move, so let the stock to recover as overall, if we analyze the long-term structure, stock has given a decent amount of return over a period of time. But yes, looking at the corrective move now, stock is trading near to its important support area for monthly chart as well as on the weekly chart. So I think as she has already bought the stock and holding it, so my advice would be hold it with stop loss of 545. If it's not breaks below 545, there is a possibility of pullback trade to takes place, and 650 would be the first target, where again she may review it as other stocks from the same space like Amber, Dixon, all these stocks are in uptrend, and a momentum is continuously there in this stock. But as you've already bought at a higher level, and correction is already taken place in this counter, so there is a chances of recovery as other peer companies are showing good traction. So maybe we may see some buying interest to come back in this counter. 600 to 650 would be the next target, where you can again review whether the strength is coming back at higher level or not.
All right, that's the view on PG Electroplast. I hope that answers your query. We just have enough time for a couple of more queries then. Want to take up this query from Alex, who has a query on NMDC, and he has a longer time horizon, though hasn't really mentioned what the time horizon is really is. Right now, it's completely flat. The stock has seen good traction along with the metal pack, up 10% or so in the last 1 month. Would you prefer this particular counter within the metal pack or some other name?
Yeah, definitely. So NMDC is looking attractive, and the way NMDC, GMDC has managed to give breakout on the near-term, short-term structure after a long consolidation, I think NMDC has potential to continue furthermore upside. The next target where we are projecting is 82 to 85. On the downside, 74 needs to keep as a stop loss. Again, as I mentioned in my opening commentary also, that metal space is also looking bullish, and I think Hindalco, as I've already recommended, is looking attractive. Again, from the same space, NMDC, you have already pointed out, GMDC is also shown a sign of good rally, though there is some cool off action in today's session. But if you get opportunity around 545, 540 would be again, buying opportunity in this counter, as breakout is already taken place on the weekly chart. So any decline towards 545, 540 is a buying opportunity with stop loss of 530.
Hmm. Okay, that's about it. The metal pack, all those names, keep them on your radar. But I want to talk about this stock called KRBL. Of course, the stock is down somewhere around 9% or thereabouts. It's in focus given the fact that one of its independent directors has quit over governance concerns. The stock was already under pressure. But what do you make of today's move on KRBL? Fresh breakdown of sorts?
Yeah, there is a breakdown on the weekly chart. Stock has already broken its upsloping trend line support area, and looking at the near term, short term structure, stock is now slipped below to all its near term, short term moving averages. So till stock is not able to regain above 430 zone, I think trend is likely to exhibit on the weaker side, and maybe in the decline, we could see lower trajectory of 390, 380 also. So view is negative for near-term perspective. 430 is the key hurdle. On the downside, maybe we can see slide further towards 390, 380 zone.
All right, that's about it. KRBL. There's been a fresh breakdown on the weekly charts of KRBL. Of course, reacting to negative news flow around the counter as well. But with that, of course, we've come to the end of the query segment, and Rajesh would like to thank you as always for joining in and sharing your thoughts with us and helping our viewers navigate with their stock-related queries as well. I look forward to seeing you again sometime in future.
Yeah, thank you.
Thanks a lot. Have a good day. Looking at the market, we are extremely flat at the current juncture, just about 30 points down on the Nifty. 25,083 is where we are at. We're holding on to the 25,000 level. Mind you, we've been making higher highs and higher lows. And of course, after 8 straight day of gains, the bulls are perhaps taking just a little bit of a break. Sensex down 60 points, but the mid cap end of the market's holding firm. We're up 0.3% when it comes to the Nifty mid cap index. And the breadth is also firmly in favor of gainers. So not looking all that bad. It's just about flattish when it comes to the headline indices. But of course, on that note, let me bring on board our next guest for today, Big Market Voice. Joining me is Feroze Azeez. All right, he's just getting ready. We'll get him on board. But of course, before I get you more on the markets, let me get you a message from our side introducing Money Control Super Pro, your ultimate investment superpower. You can get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today itself. All right, then let's take a look at what some stocks are really up to this morning. If you look at some of these consumption auto names, they are topping the charts as of now. The stock of Hero MotoCorp, that's among the top gainers, up just about 1% or so. But that's Hero MotoCorp. Bajaj Auto also doing well, 0.5% up. Bajaj Group stocks are in particular doing well. Bajaj Finance, Bajaj Finserv, these are also among the top gainers as we speak. Tata Motors are seeing good traction. Some of the private sector banking names are also doing well. The likes of Kotak Mahindra Bank is in the green. IndusInd Bank as well. It was one of the laggards last week, but it has managed to edge back into the green. All the other auto names like Maruti, doing well. Even SBI, for that matter, is just about holding on to gains. It's extending those gains. PSU names, in particular, have seen good traction in recent times. Consumption names also, the likes of Trent, after a down week last week, it has managed to edge back into the green. Some buying interest coming in when it comes to consumption names as well. On the flip side, some of these, pharma and IT names are under selling pressure. IT, of course, was among the big gainers last week, but seeing some profit taking. You can see Infosys, that's among the top laggards. TCS, HCL Tech, Tech Mahindra, all of these stocks are also witnessing some bit of selling pressure. But Dr. Reddy's is the top laggard. One of its Hyderabad unit, the Bachupalli unit, has got USFDA Form 483 with 5 observations. So that stock is under pressure. You have the likes of Cipla, Sun Pharma also being dragged down. The entire pharma pack, as I had said at the start of the show, are trading in the red. Life insurance also seeing some bit of pain. SBI Life, that's among the laggards. Some metal names have also come under some bit of pressure of late. Of course, metals have been one pocket. But metals has been one pocket that has been shining bright. But today, JSW Steel is witnessing some bit of selling. You have other names also like BEL that has slipped into the red. Remember, defense stocks have been seeing good traction. BEL started the day in the green, but it has slipped into the red. All the other metal names like Hindalco, uh, JSW Steel, as I had mentioned, are in the red. Reliance Industries is also slipped into the red as we speak. Ultratech Cement, Eicher Motors, HDFC Bank, ITC, Geo Financial, these are among the laggards. But let's also take a look at some of the stocks on the Nifty 500 index. As I mentioned, KRBL is one stock that is down and out. That's 9% on the back of negative news flow that one of its independent directors has quit. The stock was anyway under pressure, but today it is down somewhere around 9% as we speak. So yes, that is one stock that you must be keeping on your radar for today. But on that note, let me bring on board, as promised, Big Market Voice. Joining me is Feroze Azeez, Joint CEO at Anand Rathi Wealth. Feroze, always a pleasure chatting with you. It's a rainy day here in Mumbai. Almost, been pouring since the time I woke up. It's a red alert. And, same thing goes for Dalal Street. We've seen some bit of outpouring of gains, right, of the last 8 sessions. Today being a day of breather. Of course, we've had reforms in the form of GST cuts, but this week Fed will take center stage. What are your thoughts? 25 basis point baked in, or is there an outside chance of a 50 basis point rate cut, given the fact that there is ample pressure coming in from Trump?
So I think 25 bips is, in my opinion, best case situation. I go wrong several times when you're predicting closed rooms behavior. It's very difficult to predict that. Total market sentiment behavior is still a predictable variable, as you could see. So I would say 0.25 is what I would vote for. Point one. Point two, looking at the kind of numbers which are flowing in, I personally think these rate cuts and the pace at which those rate cuts will happen will be a lesser long-term variable for how the US could impact Indian or emerging markets. I was in the US last week. When you're meeting investors, what I get a sense that the different spillover effects, or at least on the negative side, which US can throw up for emerging markets, is the immense leverage they're sitting on. That's point one. And second is how will Fed roll down its balance sheet. They have about papers of 6.5 years is the modified duration of the Fed's balance sheet. How do they roll it down? Do they QT, or do they just hold to maturity and roll down their balance sheet to half the size? Is what will be interesting. And the kind of leverage which US is sitting on, you would see some technology stocks which went up dramatically. That's a very high short gamma market. What that implies is a separate story, but that's the two things which I would watch out from a medium-term investor's perspective, or as a cue
Hmm.
from US to Indians.
Sure, Feroz, there are, of course, concerns around, Trump's tariff also, facing a legal setback, right? How concerned are, foreign investors about that in terms of US deficit? Because, we will still be awaiting a verdict from Supreme Court in that sense, right? So, do you think there are fears around US deficit in that sense?
See, US, as long as it's a reserve currency, there is not so much of a problem with the deficit per se. Of course, the kind of borrowing they have, 36, $37 trillion of borrowing, and they're adding to the deficit, of course, is a long-term problem. But I think for a country which has the reserve currency in their control, till that remains, I don't see that as too much of a problem. What has US
Hmm.
done has over the last 22, 3 decades, it's always deferred the problem by using and capitalizing on this fact. In 2008, they printed money, saved a lot of corporates. In COVID, they gave a lot of money directly to bank accounts. In fact, some of my NRI or green card holders or US citizens who were in India were getting credits in their bank accounts as a COVID support. So surprising, and you would have about $100 million as an investment in India. So point I'm trying to make is they've always tried to pump in money and capitalize on their status of having the reserve currency under their control. So deficit is not so much of an issue, but I think the Fed balance
Hmm.
sheet squeeze, how it will be brought back to normalcy is something which I would always watch for.
Hmm. Okay, so what's the sense you got from FIIs when it comes to India and the flows into emerging markets? Do you think a Fed rate cut would move the needle? Because there is some bit of thaw also emerging, right, between India and US, given the kind of tweets and commentary from both the sides. Would that move the needle? Because they've already pulled out a sizable amount from the Indian markets, and that's a piece of the puzzle that's been missing for us this entire year. FII flows.
Yes, Nandita, see, if you look at how FIIs are being looked at in India, they have to be broken down into three parts. Okay, FII, one name fits all. It doesn't work that way, in my opinion, because there are active FIIs, whom I met about 8 of them in the US. There are index fund investors who are FIIs again, but they are not assuming any discretion. The third is prop investors, especially those institutions which have their pension funds and stuff being invested in India directly for themselves, not for a fund manager. So the active fund managers who have quit India or largely quit some stocks which were absolutely overvalued because they have several other options in the form of emerging markets. They're actually not so valuation sensitive as much as we believe they are. They are very growth sensitive. If any sector is not throwing up growth, they are not wanting to hold that. And I think that is the key issue. And there are some sectors which are now promising growth. And that's where you will see a lot of these active actively managed funds who have billions of dollars invested in emerging markets will move some money. Last 1 year, the growth has been disappointing in several sectors, is why I think they've moved out. So they're very agile. They will come back. They're not so valuation sensitive. As long as you give them a 20% growth business, they're ready to buy it at 50, 60, 70, 80 PE also. As long as the 20%, 25% growth is sacrosanct for 5, 7, 10 years. So I personally think the needle will change. To answer your question, I think they will come back as soon as growth becomes a little more promising, which was not the case for the last year and a half.
Hmm. Okay, of course, we tend to highlight the fact that, FIs are concerned about Indian market valuations, and that's a new perspective or fresh perspective that you've shared with us. Before I come to sectors, Feroz, we've had a SEBI board meet on Friday. Quite a few, sweeping changes announced by SEBI. They've relaxed the minimum public shareholding norms as well, and even in terms of easier norms for, foreign investors. They've kind of approved the single window automatic and generalized access for trusted foreign investors. How do you view these measures that SEBI announced? How do you think what kind of implications would that have? A, on FII community, and B, because of the easier minimum public shareholding norms, do you expect it to unlock a fresh wave of IPOs? We've already seen quite a few big ticket ones, but what's your sense going forward?
Yes, Nandita, just to wrap up on the previous one point where I'm saying that FIIs are not so valuation sensitive, if you just are able to get a hand on these active fund managers and their
Hmm.
portfolios, you will see several high PE stocks in them which are actually delivering the growth, which proves the hypothesis. Most of us go with perception that valuation ज़्यादा होगी इसीलिए बेच दिया होगा, क्योंकि हमें सुकून मिलता है उस आर्ग्यूमेंट से.
Ah.
बट इफ यू लुक एट देयर पोर्टफोलियो, दे हैव their average pre's are not as much as a value sensitive investor,
Hmm.
so that's the point. Now coming to how I see all these developments, of course SEBI's board meeting had several things. One is from the cash market standpoint, one is the long term derivative standpoint, one from the investor and the mutual fund fraternity and the investor education standpoint, new investor creation standpoint. So it covers a wide gamut of things, right? If you look at from a development standpoint, SEBI is doing very, very good small steps which will add up over long periods of time. And that's what SEBI has been doing. And I really respect SEBI for that, because if you see incremental changes, see, Indian investor is going to pump in 50 trillion rupees in the next 8 years. In the last 3 or 4 years, the domestic institutions have pumped in 15 trillion rupees, which is almost 8 times, 9 times more at the
Hmm.
rate at which it has pumped in money over the last 8 years. So developing the cash market is very important. To develop the cash market, you need more paper. The next is you need more free float of the old way. If we don't do this, we will create bubbles. And we don't want retail investors to buy into bubble and get disappointed and go away. So every step you see is into these two buckets is what I classify. One is develop the already listed paper. India has
Hmm.
only 6% of NSE 500 companies have 90% free float. Okay, it's exactly the opposite for S&P 500. S&P 500 में 95% कंपनियां 92 93% of the companies have 90% plus free float. Here we have only 6% who have 90% plus free float. And we frown upon promoter selling. If promoter doesn't sell, how will price discovery be fair? If promoter is gobbling up and holding 70 80%. So I think that needs to happen. And the anchor investor quota becoming higher, because today retail quota is also increased. But IPOs, which are great new businesses which are coming in, most people are using in the retail and the individual space to flip it in the first 3 days. Now, if if you've done
Hmm.
so much research, bought a good IPO, at least realize its price, right? I realized this when we had got listed. Before our bell ringing ceremony was over, the volume traded was greater than the number of shares given to the market. I was so surprised. That was a revelation for me. Did people realize my stock went up 10x in 4 years? But nobody who actually did the research and bought it were the actually investors, may or may not be. So I think IPO market also needs to develop into a long-term market. rather than a short-term listing gain market.
Mm.
So I think that's how I see that. But the great part is also on the new investor initiative. You see that they have brought
Mm.
in an incentive for newer investors. If an investor from a tier 2 city or a tier 3, apart from the B30 cities, if a distributor brought a new PAN to the industry, he gets additional 1% commission on his first 12 months SIP capped at 2000. This is a great initiative. Like that, so
Mm.
several initiatives have been taken. Initiatives have been taken for PANs which belong to women. There will be more distribution commission. Right? Today, you go to a sub-registrar, you get a discount if I register the property in my wife's name. Similarly, a
Mm.
distributor gets more commission if he brings a lady in. All these small things are very strategic long-term initiatives. So I loved the board meeting minutes.
All right, so that's an exhaustive answer of the entire, sweeping changes or the no changes in norms that was announced by SEBI over the weekend on Friday, so to say. But let's talk about pockets of value now. Autos. I was getting your thoughts, given the fact that we've seen quite a bit of an up move when it comes to auto names, especially since 15th August announcement by the Prime Minister. But back in 2008, when the government slashed excise duty on automobiles by 4% or so, we saw that resulted in a 20% up move in auto sales across categories within a year or something. But this time also, auto stocks have gone up anywhere between 6 to 15, 16% already since August 15. But do you see this just as a start of an upward movement in these stocks? So do you think that much of these GST related announcements are already baked into the price? Where are you? Where do you think we are in the upcycle or re-rating when it comes to auto stocks?
See, the last time I was there, I told ABC. I think it was a month and a half, or even more behind. ABC, auto, banking, and consumption were the three themes we were looking at, and I think that those have panned out over the last quarter reasonably well. Whenever we look at sectors, we look at how can an investor own it, not a trader own it, or investor owning it should have only one objective: can it beat Nifty by 3 to 5% every year for the next 2 3 years? If that's the criteria, then go the sector way. Otherwise, diversified is the best way to go. Now I'm adding D and E to it: drugs and energy, renewable energy especially. So I think ABCDE is the theme which you can look at. Firstly, but
Mm.
coming back to whether the GST thing has played out, I personally think no. Like the corporate tax rate cut, it has been done a few years back, still benefits me as a corporate and several other corporates and their earnings. These GST cuts will have long-term impacts on consumption. And no 5, 10, 15% move can price that in my opinion. That's my strong belief. And I think if you have a portfolio of consumption, for example, I think most of us, we use lingo which does not get interpreted. I was listening to two oncologists speaking in their lingo about a patient. It was so intimidating. Consumption is any business where you sell from a business to a consumer, and I'm reasonably bullish on that theme as well.
Mm. Okay, what about metals? Last 2, 3 months when the markets were underperforming, metals were doing well. And of course, we also have this whole theme of China involution, wherein they are curbing, cutthroat competition and reining in capacity, right? Uh, Metals are being seen as the big winner of that. And of course, we've seen the dollar index also is softening, so to say. And of course, we also have a Fed rate cut coming through soon enough. So how should one really look at metals? Do you think should one look at both ends of the spectrum, ferrous, non-ferrous? Should one play this theme for the next year or so?
Depends on how smart you are. Anything which is cyclical, you need to have some data about your capability to enter and exit. Some businesses require a certain temperament. I think that's where metal would fit in. The kind of cyclicality or the cycle frequency is so low. The amplitude is so high. The frequency is also high in terms of its peaks and trough. That cyclicality is a business I would not recommend people playing unless you have shown the temperament. At least the last 10 decisions of yours have gone right in terms of entry and exits. Most people
Hmm.
evaluate themselves more liberally and evaluate a fund manager more stringently. That's what traders end up doing, and that's the non-mathematical way of managing money. So anything cyclical, unless you have a case of hypothesis checked on yourself, that your temperament has permitted to get in and get out of cyclical stocks, you do not touch it ideally.
Hmm. Got your point. But there are some other beneficiaries as well, right, out of this whole anti-involution drive. Some EPC companies, solar energy, etc. Any of those names, or would you expose yourself to those pockets now?
The renewable energy will definitely be one which, as an industry, if you look at an industry, if you look at a sector, you should see how the emerged markets have played. So 10 years later, would we be selling more cars? The answer is yes. So you have to. So if you speak of energy, I would say renewable energy is a subsector which I would be reasonably bullish from a 4, 5, 7 year standpoint. How we would go would be how the US is today.
Sure, got your point. A couple of more questions then. Feroze, how are you looking at the entire precious metal, gamut, and how should one really expose themselves to precious metals within their portfolio? Gold is, hitting fresh highs. Silver is where it's at. Prices can't really be, one can really not catch these prices. So how should one really play into this rally? And how much of a portfolio composition should consist of precious metals now?
See, precious metals or any asset, firstly, you should have some basic filters in life of what will I buy with my hard-earned money. Any asset which has given you 10-year negative return in a high inflationary economy is never going to be an asset for me. Silver has done that. Okay, so otherwise you will always be buying it at the wrong time. Silver has, for 10 grinding years from 2011, if I remember right, it had touched some 77,000 rupees to a kg, and then it languished for 10 years. Agar India mein, if you don't make money for 10 years, you have lost 60% of your value anyway. So silver, I don't even call it an asset because it has not passed this litmus test. Gold is a very important asset for an Indian because Indians love gold and they love FDs. Anybody who's got FDs, he was better off in gold and significantly better off in gold. So if you love both assets, at least be in the better, the asset which reserves more love. If you don't have debt in your portfolio like we don't, I don't recommend to my clients gold because their portfolios for the last 11 years have delivered 15.5% on the overall asset, including in every asset they have. So I don't have any regret of not having gold because the last 5 years IRR, if you chat GPT 8, 1 year, 3 year, 5 year, you will get 5 years at 13.5. So if you are a debt investor, at least have half your debt in gold. Because what global transformation we are going through will create a reasonable buoyant dollar gold environment for gold. So dollar gold had got stuck below $2,000 and that broke out. And that's the great news. And I think over the next 10 years, the kind of geopolitical situation has panned out and how countries are gobbling up gold in their treasuries, I would be reasonably bullish that it will beat debt hands down. And that's what any debt investor should put half his money in gold in the form of sovereign gold bonds. We've got a hand on the secondary market or even gold ETFs.
All right, that's the view then. But Feroze, any thoughts on those looking to invest in defense names? Because of late, defense has once again seen some buying interest. Of course, you mentioned the ABC of consumption and how of course, consumption plays now gaining traction. But for those looking to enter into defense now, would it be an opportune time?
See, the valuations are still stretched, but it's significantly better than buying it at the peak. I'll again bring you back to consumption because you should never look at more themes. You should decide which is the one best theme you can go for as an investor. Because themes might be interesting, but you can't play 5 themes. Then you're better off playing diversified because 2 of them will not pan out. This is the first time I am seeing that there's a theme which has become so popular and so much decibel, and the last 1 year return is minus 2% of the 27 consumption funds in India. Otherwise, जब भी वो theme की बारी आती है, इतना बातचीत होने लग जाती है, तब तक if you look at the rearview mirror, they would have beaten Nifty by 20%. That's what happened to defense. People bought defense at the wrong time, where the rearview mirror had already delivered 50-70%. So the 27 consumption funds in India are at minus 2% average return for the last 1 year. And the consumption theme, decibel is so high, but the rear view mirror is not so good. So that's a good
Hmm.
combo. And I think that's why I would say a lower risk consumption would be better than defense.
Okay, lower risk consumption better than defense. That's the call. But with that, Feroz, lovely chatting with you. We discussed an array of topics and love to have your thoughts and perspective on each one of them. Would like to, again, of course, interact with you sometime soon. Have a great day and hope to see you soon.
Thank you, madam. Have a nice day.
Thank you. Well, of course, that was the call then, a bunch of topics, and of course, Firoz's perspective, of course, new perspective that he shared when he, in terms of his meeting with the FII community as well. But let's take a look at what the markets are doing then on that note, because we were pretty much flat, and but we were, in fact, when it comes to the broader end of the markets, we were. Trading in the positive zone. The Nifty just about very flat, down somewhere around 20 points or thereabouts. No big cuts. Bulls seem to be a little fatigued after an 8-day rally. 25,100, we are around that level at the current juncture. But let's see how the day pans out. The mid cap index is holding on to its gains, outperforming at the current juncture. Look at the advanced decline ratio. That's at 2:1. That's where it's holding at. So breadth is positive. The Nifty Bank Index is also holding on to that 54,800 level. We are round about or very close to the 54,900 mark. Pharma names under pressure, and looking at some of the auto names, they've also kind of come under some bit of a selling pressure on the back of profit taking. But some of the handful of gainers at the top are the likes of Bajaj Finance, Coal India, Adani Ports, L&T, ICICI Bank, and Eternal. Well, of course, with that, we've come to the end of this edition of Opening Bell. But before I go, just want to tell our viewers there's a message from us introducing Money Control Super Pro, your ultimate investment superpower. You can get live calls, trading and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro is where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today itself.